Gary Schilling comes on and we talk about low interest rates. You have one of the greatest calls in the history of market economics in your steadfast belief in low inflation. You said that in my book a million years ago. Maybe it took a little long to get here, but as Ed Hyman mentions, now inflation expectations are bottoming out. Does the public have it right that inflation expectations should be set low?
Well, they have been set low, and they're probably going to go down even more. And there's a variety of reasons. There's the structural reasons, and there's the cyclical reasons. And the structural reasons are excessive debts everywhere, aging populations in the OECD, and of course, technology. And heading into 5G is going to be hugely deflationary from a business cost standpoint. And then in terms of the cycle, well, excuse me, why are inflation expectations going to bottom out? The global economy is turning lower. Yeah.
In 2 hours, Mario Draghi has to speak. Chairman Powell's got to act on March 20th. And as you say, there's a belief of consensus, including Bill Dudley yesterday, that we're going to see a lift up later this summer in growth expectations, maybe in actual growth. And I believe with that, a lift in inflation. You don't agree with that, do you?
Oh, in 2 words, pipe dream. So where's this liftoff going to come from? And why would you formulate your forecast on a liftoff in growth when the OECD leading indicator has declined 13 months in a row? You look at the U.S. leading indicator, what we do is we strip out the real side economic components out of the Conference Board's leading indicator, the 5 hard data, not surveys. They've stagnated since March. So the leading indicators are telling you there's no liftoff to growth. So we're going to get the second half. I mean, it's a forecast. I doubt it's going to be an accurate one.
David, let's go to Francine in London. Francine?
Yeah, David, I just wanted to ask you whether you think that now central banks are going to be just much more dovish around the world, and whether that will create a policy mistake because they've missed the window of normalization.
Well, firstly, I don't even think that's a forecast anymore. I mean, global central banks are turning more dovish. We've seen that a huge pivot by the Fed. You saw the Bank Canada statement yesterday. Expectations have shifted in Australia towards a rate cut. The PBOC obviously has been easing policy through liquidity in the banking system. So this process is already starting. You know, the concept of normalization is all based on R-star, or where's the neutral policy rate, which is inherently unobservable. And so I think actually when you're taking a look at inflation, and that's part of the equation, so much, for example, of the CPI and the PC deflator are imputed services. They're basically numbers. And all that, yeah. Well, they're numbers that the government makes up because they're not really prices you can inherently observe.
Let's go to Bill Lee here. We had an OECD yesterday.
I'll just make this point that when you look at prices that are observable in the inflation data, it's not even running at a 1% annual rate. So where's the normal interest rate? The Fed used to tell you it was over 4. Now it's 2.5. When all's said and done, we're going to find out that neutral is 2% or less.